Yeah, my name's Robin Thatcher. I run a business in the UK that's an accountancy business called By the Book Accountancy, and from there I opened something called cryptotaxhelp.co.uk. It's just, I got into crypto about 3.5 years ago, happened to be an accountant and realised that there's a bit of a niche for that there. As with a lot of people in this room probably, I went down the altcoin route to start, made no money, lost everything, and then discovered that Bitcoin is the only answer. I do tax for all of cryptocurrency, but my biggest disclaimer here is I'm not an Irish tax consultant, I am a UK tax consultant. I can give you advice on how to set up business and personal. That's what I'm here for today, to sort of talk about how compliance works, how we can set up, how we can help our existing accountant. One thing I'm really keen on as well is that a lot of business owners or personal tax people have existing relationships with accountants who might not know about crypto. Me personally, I'll work with their accountant, I'll help them do their crypto side of things. And that's what I'll sort of talk you through, how to set up, how to work with your existing accountant. I appreciate it's quite a personal relationship for people, so it can be difficult to switch. So yeah, I am around all day. People will have questions. Feel free to collar me and ask any questions you want. So I'm going to start off with personal tax. I'm going to apologise first of all. I wrote this again this morning because I managed to lose a flash drive on the plane with my presentation on. So that is my excuse for why it's so bad. I do appreciate as well that tax is one of the most boring subjects. It is my life, so please bear with me. I do know. I speak to people all the time. I'm that person at parties that talks about tax. So where to start? This is from a personal point of view, first of all, on personal investments. What I'd always advise people, whether it's a friend or whether it's someone that comes to me, is you need to set up some sort of record-keeping mechanism. Now, one of the things I've found since becoming a Bitcoiner is there's certain rules. Some of those rules are around not asking people what their stack is. Totally understand that. Make sure you're upfront and clear with someone about what you're willing to talk to them about, whether it's an existing accountant or a new accountant. They should be able to work within those parameters. I will work with a client and say, okay, what do you not want to tell me? Because if you don't want to tell me how much you've got, all I need to know is your cost base. So in the UK, we work with something called Section 104 pooling, which means that, say you buy 10 Bitcoin over 10 years and your cost base fluctuates, all that matters is how much you paid for that 10 Bitcoin. You divide it by 10, that's your cost base per Bitcoin. So that's how we work out your cost base. So I'll have clients who will say to me, over the course of my lifetime, I've spent £5,000 per Bitcoin. That's all I need to know. I don't need to know how many they've got. I don't need to know the rest. Then when they tell me what they've sold and how much they've sold, I can work out their gains from there. That's quite easy for me. So I will have people who come to me and go, here's my cost base, here's the dates I sold and how much I sold. I can work out how much taxable gains they've got. So my advice would be, as I say, be open with that with whoever you're dealing with, whether that's your accountant. There are softwares out there that help us. So I work with various crypto tax softwares. There's Coinly, which is probably the easiest one to use. There's one in the UK called Recap. They're quite new. Coinly, the reason I suggest Coinly quite a lot is you don't pay anything to set up with it, and it's quite easy to use. You import your wallet addresses, you can link APIs on exchanges, and it will pull through all your transactions for you. The only side that I find challenging sometimes in Coinly is private wallets. When you send to private wallets and cold storage, you might not feel comfortable putting that wallet address into a piece of software. Security is always a big issue, I understand that. If you work with an accountant that's Coinly savvy, so one thing I'll do for clients is I can create wallets on Coinly and just say, I can see that transaction, that's you sending to a cold wallet, I don't need the address, I can manually tag that address for you, so I can create something. So it's just about being open and having that conversation. One thing I will say on that point is if your accountant is not crypto savvy or Bitcoin savvy, have an open conversation with them, because the biggest misconception I see at the moment is accountants, and this is not criticising anyone, but they've been in the game a long time, they like to think they know everything, they don't want to tell their client they don't know something, they will give a wrong answer. And I will tell you, this is me being, again, completely honest, us as accountants, we're so unaccountable for what we do. If HMRC or if the revenue writes to you or if you've done something illegal, I'm not the one whose door they'll knock on. It will be your door because you sign everything I do off. So I do see a lot of bad advice going around. So my advice would be speak to someone that you know is savvy. Have a conversation with them beforehand to validate that they know what they're talking about. And I don't just mean, do you know about crypto or do you know about Bitcoin? Ask them some technical questions, challenge them, because you can wean out when someone's going to give you bad advice from there. I'm happy to have a technical conversation with someone. I love Bitcoin, I love talking about it. If you are speaking to someone that doesn't know Bitcoin and doesn't understand what they're talking about, it's a real risk to you, personal tax and business tax-wise. So I would have that open conversation. If not, if they don't deal with it, and like I say, a lot of people have been with accountants for years, have an open conversation with them about would they be willing to work with someone else who can be crypto savvy for you. If you imagine in an organization, you'd have a finance director. That finance director, if they don't deal with crypto, would hire someone to deal with crypto. It's exactly the same for you, whether it's personal tax or business. You need someone that's a specialist in that area. This area is going to grow. We all know it's going to grow, and it will get easier. But right now, it's a challenge in the accountancy industry. So I will say that. Different types of tax. So again, I'm being really careful here because I'm not an Irish tax expert. But in the UK, we have capital gains tax and we have income tax. It's really important to distinguish what different types of tax might be involved with the transactions that you're doing. So for example, in a personal capacity, if you are getting paid in Bitcoin for something, that's income. And it's income on the GBP amount or the euro amount on the day that you receipt it. So if I receive 1 Bitcoin today for payment of service for speaking here, they're not, but just imagine I did. It would be the euro equivalent, as at today's rate, that I'm paying income on. Now, if I choose to hold on to that Bitcoin, what is important is I'm holding an investment. It's exactly the same, and I always spread this out. It's the same as me receiving income in the euro equivalent of 1 Bitcoin today and then deciding to invest it. Because what I'm effectively doing is holding it into a new tax system. The reason that's important, we all know about volatility. If you hodl and then tomorrow Bitcoin falls 60%, you have got an income tax bill on today's Bitcoin price, but you've then got a loss in capital losses on tomorrow's Bitcoin price, which could be a loss of 50%. What you've got is a tax bill. Let's for argument's sake, say Bitcoin's 60,000 euros today. You're getting an income tax bill on 60,000 euros, but tomorrow you've only got 30,000 euros, and you can't offset one against the other. The loss is a capital loss, which falls under capital gains. So it falls into a separate tax system. I've seen a lot of people fall at that hurdle. So it's about risk management as well. When you receipt it, understanding how much you want to hold on to. So that falls into the tax considerations. Here we talk, sorry, yeah?
So you're assuming that 1 Bitcoin has been sold, but you've just received as income.
The moment you receipt it as income, it's not about selling or buying, it's a separate transaction. So the moment you receipt it, it's as if you received 50,000 euros, 60,000 euros of income. In fiat, yeah. It doesn't matter that it's in Bitcoin. Your choice then is whether you hold it in Bitcoin or convert it. So I heard someone say earlier that they keep all their Bitcoin on their balance sheet. That's fine, but it's treated as a separate transaction. It's a sale immediately. That sale is recognized in your profit and loss, whether it's personal or business. But then you decide to hold on to it. So it's as if you've then reinvested it, because it doesn't matter that you've received it. It doesn't matter if you receive it in Bitcoin. It doesn't matter if you receive it in gold. Whatever you receive it in, the GBP equivalent at that day is what matters, because you've technically received it. Sorry, I hope that makes sense, and I apologise if I do. So market opportunities for accountancy are, as I said earlier, the accountants market at the moment is very much in a transitional phase. You will find a lot of accountants won't touch crypto. That's why I've put this on there, because if they don't, that's absolutely fine. Like I say, you can work around it, but someone like myself, there's other people out there, we will have an open conversation with you. I'm not going to sit there and say you need £1,000 to sit in a room with me. Generally speaking, the way I work is someone can have an initial call with me, and hopefully that builds a relationship. If it doesn't, though, I can point them in the right direction and give them a bit of advice. This market will grow for accountants, but we're in a real resistance period at the moment. You have people like myself who are open to it, who see Bitcoin for what it is in the future. You'll have a lot of accountants who'll still laugh and scoff and say it's going to zero. So you do have to bear that in mind when you're having these conversations. And software, I talked a little bit about earlier. As I say, the important thing for me with software and with a client is always to say, when you set it up, are you paying for it from day one? The reason I say Coinly, you don't pay to set up. You simply set it up. You can use, it's non-KYC'd, so you can set up a proxy email address. They're not going to ask for any ID. They're not going to ask for anything. You don't have to worry about that. You can set it up, and if you think it's accurate or if you're happy with the information it pulls through, you pay for the software once you actually need a tax report from it. It's compliant with different jurisdictions, so you can set the jurisdiction. It's a really good bit of software, and the reason it's the best is it's probably been around the longest, so it's adapted the most. Okay, so I've put Bitcoin in the finance and accounting industry, but it's general business tax now. So I'm more talking about from legal entities of business owners and business holders. So someone in the previous slideshow talked about businesses accepting Bitcoin. That's absolutely fine. But as I talked about earlier, it's really important that you work with someone who understands the accounting in the background, because it is not easy. And when I say it's not easy, you need to understand, when I talk about compliance in the UK, it's actually very similar in Ireland from a business tax perspective, because we use something called accounting standards. So accounting standards are generally accepted all around the world, and they should be similar. So when you receipt your Bitcoin, you make a choice of what you do with it. But what matters is in your profit and loss, if you're receiving it for a service or in exchange for something, it is classed as a sale on that day. So then you make a physical choice to keep that Bitcoin, and it goes into your treasury management, and it goes into as part of your treasury. So that's affecting finance and accounting quite significantly, because I think it can be quite a blasé subject that's quite easily brushed over to say, oh, it's okay, it's just an asset on our balance sheet. There are specific ways that Bitcoin and crypto as a whole need to be treated on a balance sheet. They need to be treated in a certain way. They need to be revalued at the end of each period. You revalue them to their current valuation. You don't realise the profit and loss. You don't realise the gain on your profit and loss, but you do realise the gain on your balance sheet or the loss on your balance sheet. And it sits in something called the revaluation reserve. Now, what I find is, as I said before, some accountants know, some accountants don't. Ask your accountant if they understand. Ask them how it should be treated. Get an answer in writing. I can tell you now, I have 10 people at least who've written to me and gone, this is what my accountant has said. Is this right? Now, if their accountant's right, I actually had one last week, and they sent a perfect answer, and I went back to them and said, in 3 years of crypto accounting, that's the best standard answer from an accountant I've seen, because it is absolutely spot on how the accounting treatment should be. So that person went away and was happy that their accountant knew what they were talking about. But if you're not sure, you should ask the question, get it in writing, and seek a second opinion. Again, I understand that accounting relationships in business especially can last a long time and can be really important, but this is going to be a significant part of your balance sheet and treasury potentially, so you need to ensure it's being accounted for correctly. And once again, I go back to my previous point that the accountant is not responsible. You as a business owner or director are going to be signing off those accounts at the end of the year as correct. So it's important to take accountability on understanding it. Don't expect you to understand the debits and credits in the background, but obviously taking accountability for what's happening. What's on the horizon? I can talk from a UK perspective. I'm involved with a company called Crypto UK. We speak regularly to HMRC. There are international reporting frameworks coming in place for crypto. Unfortunately, crypto and Bitcoin fall into the same bracket for tax and compliance at this moment. One of the things I'm trying to lobby with HMRC, but I guarantee I'll get nowhere, is separation of Bitcoin and other cryptos, because I do think they should be treated different. But at the moment, those reporting frameworks are coming in. What that means for businesses is that Bitcoin is a risk for all businesses. It should be, most businesses should have something called a risk register. Bitcoin should be on every business's risk register, because if it's not, they stand to be left behind. If it is, what that means is you need to understand not just what's happening, but what might come in the future. Those reporting frameworks can change massively. Accepting Bitcoin as payment is great, but in the future, that could mean you have to carry out really stringent checks on your customer, because you need to be aware of who that customer is, what they're doing, where that source of funds is coming from, because it's not, under anti-money laundering regulations, it's not acceptable to just say, I didn't know that person was doing something wrong. So in future, I think those reporting frameworks are coming in. As I say, I can't give you more detail than that, because at the moment the discussions are very light, but I do know that anti-money laundering and those sorts of checks are very heavy on the agenda of those organisations. So risk controls and compliance, what I wanted to talk about here was very much custody. So I think it was talked about earlier as well in more detail. Now, I'm not an expert on this, but one thing to consider when you're a business is the custody of your Bitcoin. How are you going to hold it? Where are you going to store it? How many signatures do you need on that? And what's the risk of that? Because it's great having a ledger that's got one signature, but when the person that's in control of that ledger loses that ledger, what happens? So how do you protect your business? I actually read this morning of a massive crypto business that lost one of its signatures. And one of the arguments was actually, it was a lot of people were feeling really sorry for them and saying how bad it was. But actually, they're a crypto business and they've lost the signature of their wallet. It's just not acceptable. It's not excusable. So as a business owner, regardless of the size of your business, it's really important to get that in place. There are multi-signature custody options where if you're a sole director or owner business, you can put other things in play. You need to consider what if the worst happened, if at the moment, and this is me being completely honest, I'm currently doing a multi-signature option for mine, because if I walked out and got hit by a bus tomorrow, I know that my family would not have a clue what to do. So it's a real risk from that option. My treasury could disappear with me, So that's really important to consider. How does that work? Someone talked in the last one about how they put all of their treasury into Bitcoin. Brilliant, fantastic. However, do you understand that if you hold over 40% of your balance sheet in an asset that is classed as an investment, you become an investment company? That's a key consideration. That's a risk, because you could be an investment company without realizing it because you're keeping all of your money in Bitcoin. So it's something you need to consider and talk to your accountant about. Again, I know I keep saying that, but I don't want to tread on anyone's toes. Different accountants might tell you different things, but it's key to have those conversations with your accountant, because I'm one of them. I've got to consider what I'm going to do as I grow my treasury management more into Bitcoin. Where's that going to go? Well, it might lead me to have to open another company that's going to be a sole investment company for my existing trading company to stay compliant and ensure that I'm accurate with what I'm doing. They're all considerations that business owners have to do. So it's not as easy as it might sound to just say, yeah, I'm going to hold it all. It's great, but Bitcoin isn't cash, and it's not cash at the minute, and that's one thing to really understand. It is an investment. It's what, in the accounting industry, we call it an intangible asset. It's not a touchable asset. It's something that you're holding on your balance sheet, so it is an investment. It's not cash. It's not anything else that you can liquid and trade. It's as if you've bought property, regardless of whether you agree with that or not. That's how it's treated in the accounting industry. So it's key to understand that. Controls. So in a business, you have to have controls. I've talked about it a bit with multi-sig, but it's ensuring that things are recorded correctly. So again, in the last presentation, we talked about how sales, you might sell something directly into Bitcoin. We need to make sure that's recorded correctly on your profit and loss. So while these things are great, the software in the background, so I use QuickBooks, QuickBooks Zero, all of those things need to be recording it correctly in the background to make sure that, as I said earlier, the sales are being reported on the day that they're received as to what they are. It doesn't mean, I used the example earlier, if I get one Bitcoin today at 60,000 euros, if it's worth 30,000 euros in a week, it doesn't mean I only sold 30,000 euros. I still sold 60,000 euros, and that is recorded at that day. I've then invested that 60,000 euros and got a 30,000 loss on my investment sat on my balance sheet. So that's important to understand. And then if you don't sell that asset, you've never realized that loss. So it never touches your P&L. So again, you can be in a position where you've sold a lot, but you've not got a lot of treasury if the price action goes that way for you. Compliance. So compliance, I've pretty much covered in the rest of it, just ensuring your documentation is all up to scratch and covered for everything. And then pretty much realization of I've gone too far. Realization of gains was just the other one that I wanted to cover. So I just mentioned it there. Ensuring that anything on your balance sheet, you're effectively monitoring and tracking to ensure that if you don't sell it, you're realizing what you're holding and what gains or losses you may have, and then talking to your accountant about how you might want to deal with that in future and going forward. And I thought I was going to actually run really short, but I think I'm out of time anyway, so I will take some questions.
Yeah, we'll take a few questions there. Anybody bring out questions? Yeah, over here. Have you got a mic over here on this side?
Hello.
Yeah, hang on.
Thanks. If you got Bitcoin, do you have to report it every year?
So the accounting goes that you're supposed to track it every year on your balance sheet. You have to report it on your balance sheet. It doesn't go as much detail to say the revenue or the accounts that you show don't say Bitcoin or crypto. They'll say intangible assets or assets. So it's only that level of detail that will be visible.
But if you don't report it, say, for 2 or 3 years down the road, now.
If you're holding it on your company's balance sheet, you have to report it every year because you have to file accounts every year.
What about private individual?
You don't have to report it. If I bought Bitcoin today as an individual, I don't have to report it at all until I sell some.
So that could be 2 years down the road?
Correct.
Oh, that's fine, thank you.
You're all right, so. All them Bitcoin. He's a whole coiner.
When you're a millionaire, yeah?
Okay, one more.
Sorry.
Hi, how are you? Just wondering, I'm also a tax consultant, just so you know. Yeah.
Hang on, why are you booing her? That's unfair.
It's very unfair, actually. Just wondering, so just in terms of, I know there's software and all that people can use to record their income, right? And I don't know how knowledgeable people in revenue are, HMRC, just in relation to tracking your income, for example, right? But let's say you had a sale of 60,000. Let's say you had a sale of 60,000, for example, right? But you got paid in Bitcoin. And you know that the price can fluctuate a huge amount in 24 hours. There is probably a scope there to record that at whatever price you wanted during the 24 hours, would you say? If you didn't have a timestamped software.
If you didn't have a timestamp, yes.
And would that be acceptable, do you think? I know it's not acceptable, but how would they...
I get what you're asking. I use a 24-hour average price. So I would use a recognised coin tracker and use a 24-hour average moving price.
Unless the specific time one is
Unless
more
the specific time is
beneficial to you.
visible. So generally when people give me a date, they won't give me a timestamp. I will use the 24-hour average price of that day. If there was a massive fluctuation in the price of that day, say over 10%, that was material, I would ask them to try and get me more detail. But I've never had that as an issue.
Thank you.
Hi, Robin. Another accountant in the room. Sorry. My name's Kieran Doyle. I'm actually the co-author of the Irish Crypto Tax Guide, unkindly, so I'm glad you like it. My question for you was very simply, have you had much engagement with HMRC? Because we're trying to talk to revenue and they're not very responsive. So what are they like in the UK?
So at the moment, I am having engagement with them. I think I mentioned I'm part of an organisation called Crypto UK.
Yes.
So I joined them they were having tax meetings with HMRC in the room. I don't know, are you familiar with CARF, the Crypto Asset Reporting Framework?
Yes.
So I'm having meetings with HMRC present about that at the minute, probably bi-weekly meetings. I would say HMRC's team is about this big for something that's going to be this big.
Bigger than the one we have.
Exactly. So, yeah, I am having engagement with them, but I think they're really, really playing catch-up still.
Agreed. And the other thing, if I could ask, does DAC 8 apply in the UK now that you're no longer in the EU, the Directive on Administrative Cooperation? It kicked in last November in terms of crypto asset service providers providing data to your local tax authority. Does that apply in the UK?
It does, yeah. So what's actually happening in the UK, I don't know if you're aware, we've changed our regulations so that to actually promote crypto in the UK, you have to be a UK entity registered with the FCA. That kicked in about the same time, so it might be linked. What happened was people like Binance stopped interacting with UK customers. You couldn't open a Binance account. KuCoin, for example, you couldn't even download in the UK if you're a new customer. That was because you had to have a UK entity registered with the FCA. Crypto.com and Coinbase, who I'm with, I know, they set up UK entities and they basically went, from now on, we're registering as a UK entity. The reason they did that is from 2027 in the UK, as part of their reporting framework, they have to give customer details, if asked, to the UK HMRC.
That ties in with DAC 8. Yeah, lovely. Thank you very much.
No worries.
Okay, last one, just here.
How you doing? Yeah, just a question around the value, say the fluctuating value of if you purchase a service from, if you had a company and the value drops, you had mentioned that you wouldn't have the right to write off the capital gain, if you like. Working in reverse, if you bought something, say, for 60k, you said previously if it went to 30, you couldn't write the 30 off. If, let's say, for example, it goes to 100k, Are you liable for capital gains on the 40k of increase in the value in the coin
Is that as a company or an individual?
as a company?
As a company, no, you're not. So what happens in a company is you revalue it. So on your balance sheet, it would go from 60k to 100k of asset.
Yeah.
Then you have something called a revaluation reserve, which is on your balance sheet. You don't declare it as part of the profit and loss, but it is declarable on your balance sheet. It goes there. That 40k gain would sit on your revaluation reserve. If you then sold that, you release the 40k gain to the profit and loss account where it gets realised, but only when you sell it.
So it's a corporation tax thing then, basically. The
It's
40K
corporation
would be,
tax.
yeah.
Companies don't pay capital gains tax in the UK.
Yeah. Okay, right. Okay, thank you.
Okay?
That it? Any more? One more question?
That was the last one.
Okay, last one. Over there in the corner. Hang on, we'll get you a mic there now, 1 second.
Morning. What's the exit strategy? So I put the Bitcoin on the balance sheet. I leave it for 5 or 10 years. I want to retire to the Caribbean island, wherever. Do I liquidate the company? What do I do?
Whoa. Someone that gets paid a lot more than me can tell you that. What do you do? Well, you talk to the right accountant and you get a tax plan in place. Like I say, there's a guy in the room, Rich, who's speaking later. I would be recommending you to someone like him. Basically, they deal with high net worth individuals. They'll give you a plan to leave the UK and be tax efficient with it. There's people like that exist. Tax barristers would be involved and you'd be paying a lot of money for it. But that's why I say they'd go above my pay grade. You'd want to be putting some real tax efficient plan in place if you know you've got that asset available to you. Because once you realise that gain, you're going to pay tax on it in the company. But then obviously the difficulty is getting that money out of your company into your name. It's not simple and there's not a way around it without paying tax as such. It's about building a good plan on the best way to do that. Sorry, that's a real sit on the fence answer, but